So
Yeah.
all right.
Okay. So first time home buyer seminar. It is going to be me. My name is Brandon Cana, and my good friend here. Go ahead and introduce yourself.
Okay, guys, my name is Bryce Fransen, also known as the Lending Giant on social media. I'm a senior loan consultant here with Loan Depot, and we're going to be talking about the first 4 of 8 and our first time home buyer seminar here. So we'll be doing a couple of these to help you guys get situated in the process.
Yep, exactly. So first off, we're going to start off with a couple of fears and facts that we run into quite a bit. We have a lot of conversations every day with first-time buyers. And a huge one, I'm sure you get a lot, is I don't have any money. I don't have the money. I don't make enough. I don't have enough saved up, whatever it may be. The fact that at the end of the day, there's so many different down payment options available, right? I mean, what options are there out there?
Man, there's so many different nuances that are going to come in with down payment, right? You have this fad. People talk about, hey, I don't think I have enough money saved. I don't know if I have enough down, like all these nuances. But I think there's a huge misconception. And the main factor of that is this whole, we need 20%. I just talked to a client today. We're looking at a down payment option that we're going to be using for them down in Southern California. And they are going to spend about $12,000 and they're going to buy about a $500,000 house. So it is possible. There are scenarios. There's just got to go over the specifics.
Yeah. And it's definitely available. So never, count it out. Another fear we get is, I can't afford my dream home, like I want this specific thing in a house, but I can't afford it. Right. But at the end of the day, the best way to get there is, to buy your first home and then buy the next property and then buy the next one. And then you build it up, especially in expensive areas like the Bay Area. People come to me all the time and say, hey, I want a single family home. I want a single family home. I'm like, well, as a first time buyer, it's not the easiest thing to do, right? And you're definitely not going to get your dream home right off the bat. So I'm sure you've run into that situation multiple times.
All about strategy, setting a game plan. It's like playing chess. I tell people like, hey, like what you do now decides what we can do in steps 5, 6, and 7. So let's basically work backwards from like, what is your end goal in say 10 years? What would you like to be at in regards to home? Do you want just your single family home? That's all you live in? Do you want investments? Do you want a vacation home? Let's work backwards and set a game plan to get you there.
Exactly. Yep. It's all about setting that plan and sticking to it. Next one, fear. I should wait until the real estate market gets better. And this has got to be the most popular topic right now. It has to be. The right home may be just around the corner. That is the fact. It's true. The market's crazy. This market doesn't make sense at times. I just saw a chat today. Someone had 80 offers on a listing, and that doesn't make any sense. It doesn't make sense. But it's the reality of where we are. And you just got
a crazy market.
Yeah.
I mean, look, they talk about how it's a crazy market on the mention, but I'm telling people today, it's like, it's also perspective, right? It's also think of the other way around. It's also probably one of the most best markets to get into. You have record appreciation. You have amazing amounts of opportunity. So it's like, yeah, it takes a little work to get into it, but nothing good comes easy.
Exactly. And that's the point at the end of the day, is that if there is this many people that want this one thing, doesn't that probably point to it being a good thing?
Supply and demand, baby.
Yeah. And it being that difficult really shows you that, just you set a plan in place, you work towards it, and you can achieve it. Because people do it every single day. And that's what we're here to help you with. So here are the 4 steps, 8 steps. Well, we're going to go over 4 today, but 8 total steps to home ownership. Number 1 is decide to buy. We're going to go over that. Assemble your teams. Number 2, secure financing. Bryce is going to go all over that. He's going to go in depth in that. And then number 4, I'm going to finish off with find your home. So we're going to go over the first 4. Last 4 is make an offer, inspect and insure, sign your docs, and close, the most exciting step. But today we're just going to go over the first 4, just to give you guys, a little idea of what you should be looking for in the beginning to your first time home buyer process. So number 1, you got to decide to buy. a home is the largest financial asset most people have due to equity and appreciation over time. The biggest thing that we can talk about when buying a house is that, appreciation and equity you'll build up. There's not much, no other asset out there really that will get you what you can get with a home. And so the average rate of appreciation really is, 3 to 5%, right? But what we've been seeing recently and what we've been seeing in large metro areas is anywhere of 10% being very normal to 40% of year over year. And 40% won't last. It just can't. But
No.
it shows you that if you do buy a house, it could potentially go up 40% in 1 year. So, that's not a bad, rate of return, right? So,
No.
at a 3% annual appreciation, a home purchase for $375,000 would grow to $910,000 in 30 years. So that's at 3%, and that's like the lowest you'll get on an appreciation. And these are very conservative numbers. So 910,000 is not bad at all. Buying your first home is definitely an emotional decision, right? Home is where the heart is. That's what you hear all the time. And you're gonna get your mind and heart is totally gonna conflict each other when it comes to buying a house, because this is where you make a lot of memories. And so it's 100% an emotional decision. But as well as that, it's also a rational decision because your home is where your wealth is. And like we were talking about with that equity buildup and that debt pay down and the value appreciation, you put all those together, and it's in our opinion the best asset you can own, as well as multiple tax deductions you can take. So buying a home is an emotional decision, but it's also a rational decision because this is where your wealth is.
Absolutely.
A home is a keen investment that creates leverage opportunities. So in a few years, you can either use your home's equity to trade up to a better home, or you might consider using some of your home equity to invest in a rental property or a second home. And Bryce, I'm sure you've seen clients do that multiple times, right?
Yep. It's all about that starting point. I mean, we actually just helped a client. They just bought a single family home last year. But about 4 years ago, they bought a condo. So they just started in a smaller condo. They let it appreciate over a few years. Now, obviously, this market became a little bit more than they may have normally received.
Mm-hmm.
They used that and bought a single family home. Now they have the yard, they have everything. The dog can run. They don't have to walk it at 9 o'clock at night in the afternoon, right? So it just takes a little bit of time. Remember, this is a marathon. These are not sprint activities when it comes to real estate.
Yep. Always long term. Always think long term when you think in real estate. I will give another example. 2015, we had a client buy a townhome for around 500,000. 2 years later, it was worth 710. Sold it for 210,000 profit. Went and bought their single family home. And so that just shows the levels of what we were talking about earlier, is that you can build up in this real estate with the equity appreciation.
Yep.
I actually
$200,000 in 2 years.
Yeah, no, most people cannot. Let alone make that much in 2 years, right? A lot of people can't do that. So if you took out a 30-year fixed rate mortgage for $375,000 and made monthly payments of $2,250, you'd pay $810,000 in a mortgage and interest payments over the life of the loan. And that's a very small purchase price, but this is just good for you to see how much you'll actually be paying. And after 30 years, you would have a home with appreciated value of around $910,000. That's a very conservative number of 3% annual appreciation. But let's say, I don't want to buy. Let's just rent, and I'm comfortable with renting. If you compare that with $2,000 a month and over 30 years, you're going to end up spending $720,000 and own nothing in that 30-year time span of renting. And that's best case because that means the rent didn't go up. And we all know rent always goes up. So that's a pretty wild number to look at, that you're spending $720,000 besides owning an asset that's worth $910,000. All spending the same amount of time. So pretty wild if you just add a different number at that purchase price. Let's say 600. Let's just say 750. Double it. That just shows the potential of buying and holding versus renting, right?
Absolutely, man. The interest rate on renting is 100%.
Yes, it is. Yes, it is. And number two, most importantly, you got to assemble your team. You got to get together, and you got to put the right people in place to help you buy your first property, right? What a real estate agent does for you. I've been a real estate agent for 6 years now. I primarily help first-time home buyers. And really, at the end of the day, my main goal is to get you in that first home. What really fills me up is that last day when you get the keys to the property is me giving you those keys. That's what it's all about. At the end of the day, that's what it's all about. And that's really what keeps me going and keeps most real estate agents going. There are some that you do need to avoid, and this is actually important. You want to make sure that the agent's actually working in your best interest, not just to make some money. And that goes for any of these people on this team. But you want to make sure the agent knows what he's doing. He analyzes, your wants and needs, steers you away from homes that don't fit your criteria or homes that you might not like, because that will be a huge one that says, oh, maybe I shouldn't work with this person. They coordinate with all the other needed professionals, having a great lender to talk to, negotiates on your behalf. Of course, you want to have someone that's a great negotiator, shows you the paperwork, shows you the deadlines, shows you the roadmap, solves any problems that may arise, because there's going to be some problems, but they will be solved. So just know that you want a good agent on your team. And I'll leave this to Bryce. What does a good loan consultant do for you?
So that's good, man. I think I appreciate it. Right when it comes down to it, it really comes down to, some of these topics are listed here, right? Educate you about the mortgage financing, whether that's programs, options, scenarios, there's so many moving parts that are customized to an individual, facilitating a loan from a pre-approval to closing. So now I don't personally facilitate every single part of that, but that's where, again, it's also the team of the team, right? Mm-hmm. So really, if you're working with Brandon, there's a team behind you that are helping you with certain nuances and things as well. For me, it's the same way, whether that's my junior loan officer teammates, the processors, our underwriters, anything like that. There's more than one person that helps it. So that's awesome. So working with the right people, advising, again, like you said, loan programs, coordinating with the realtors, so I think in the product, you're kind of, as a realtor, you're really making it you're getting us into the game, right? You're giving us that opportunity, getting in contract. And then it comes down to us as a lending side, is we're actually kind of, I guess in a football analogy, I'm the quarterback. We're the ones that basically set everything up once it's in contract. You get us into it, now we're ready to go. So the whole team that comes along with that is super important. And just making sure that everybody feels like they actually are important to that process. It's easy to get busy. But we always want to make sure that everybody understands everything so they can make the best decision for their financial life.
100%. That's exactly what we want to do. All right. And step 3, you have to secure your financing. So we decided to buy, and we have the team ready, right? Yep. We got our realtor, we got our lender. Now we actually have to secure our financing. So I will go ahead and move the slide. Let me know when you want to go on to the next one.
Perfect, man. So we're talking about securing your financing, right? So the first thing I want to start there was your pre-approval, right? So getting a pre-approval, in order to get a pre-approval, myself as a lender, as a loan officer, we need to examine a few things. We need to verify your debt to income ratio, your assets, your savings, your credit. We got to look at a lot of those things. So really the biggest thing about this, we have to ensure you have the ability to repay on that loan that we're looking to acquire. Right, so a pre-approval will state you have a preliminary approval for the loan amount you are eligible to borrow. A pre-approval does not mean you are guaranteed to have that loan, by no means whatsoever, right? And here's an example of why that is not a guarantee ever that you're going to have that until you receive final loan approval once you're in contract on a home that you're looking for. I've had clients in the past, I've heard horror stories even, had a situation ourselves. Client was in contract, they went in, we're going through the whole process. He literally quit his job 3 days before because he's accepting a new job that was going to start in 2 weeks. Now in this situation, it ended up working out. It was a nightmare at the very last second, but there are things where the business was closed and they closed it the month they were doing things. So don't do anything crazy. That's why it's never a guarantee, because between you giving that pre-approval, getting into contract, and then closing on that home, life can change, and sometimes drastically. So pre-approvals are partially useful when the home process is coming because, one, begins the application process. Two, determines your actual budget, excuse me, not your window shopping skills, right? Three, identifies you as a serious borrower to sellers, listing agents, and even the agent you're working with as a home buyer that you actually want to, right? And four, it checks your credit rating and issues if there are any. Now note, it doesn't say your credit score, credit rating. Your score does not guarantee that you will fit into a loan product either. Now that's a lot more detail that we'd have to share and go over, but it's the history of your credit, the profile of your credit. Is it strong or is it not?
Yep.
For next year.
Yeah. And I will just touch on that. It will definitely show that you're a real buyer, and a lot of real estate agents won't even work with you without a pre-approval or show properties to you. So it's definitely a huge one.
Yep, absolutely. Our time is important, right? You would not ask your doctor to not, to perform, some sort of inspection or x-rays on you and expect it at no cost, right? Mm-hmm. That's kind of the same thing. As a real estate agent, you really are like, hey, if I'm showing you $1 million home, but you qualify for 500,000, it's kind of like you're, in a nutshell, that being rude, you're wasting their time. And time in this industry is everything. So securing financing, here are a few things, a list of documents you may need. Now, it depends on the company that you're working with. In regards to being here at Loan Depot, we have a lot of this system can pull it from a digital perspective, so you may not have to gather any of these documents, to be honest. But get these prepared. Pay stubs for your current 30 days. Now, if you get paid weekly, that'll be 4, 2 weeks, 2, etc. One thing of pay stubs to add to this non-list is gather your year-end pay stubs from the previous 2 last paychecks in December. So if it's 2022, get that December 31st, 2021 and 2020 paycheck, because it actually shows us a 2-year average of certain incomes. If we can help use that to increase your buying power. 2 W-2s for the last 2 years. Federal tax returns are needed in some cases. If you are self-employed, absolutely must have it, personal and business, if they are different. A copy of your valid driver's license is super important because we have to understand who you are. With 90-something% of all mortgage applications facilitating starting and finishing from a digital platform, never meeting somebody, it's just kind of the way it is. How do we verify you're Jeff and not Lucy, right? We need your ID. Bank statements for at least 2 months, and if it's any sort of sufficient for down payment and closing costs, if it's a retirement or investment account, usually you'll just grab the most recent quarterly statement because they don't usually do that every single month. Next year.
All right.
Awesome. So determine what you can afford. I think this is one of the ones that's actually one of the most common, right? And it's people look at a price of a house and they think, okay, that's how do I get to that price? Now that's great. Well, let's understand, like, what is your actual budget and what you can afford, right? How much savings do you have? What is your income? What are your debts? You got to take inventory of your monthly income versus your monthly debts, as well as your savings, to kind of figure out how much you can put towards a down payment, how much you can afford to pay each month. We can obviously assist you running those numbers. We go through, it says pre-qualification. I typically will not even offer pre-qualifications. I want to do pre-approvals. Let's do 90% of that work up front. So that way, when you get into contract, you understand, and you can go through that fun emotional ride instead of being freaked out about, well, is it going to work? Is the loan going to be good? We won't do a pre-qualification. We won't even just do a pre-approval. We'll do a fully underwritten pre-approval. And that is about as close to a cash offer as you're ever going to get. So super helpful. And how much stronger does that make an offer look? Brandon, if you have a listing and someone comes to you and is like, hey, I got client that's pre-qualified, you're like, cool, right? The verbiage on a pre-qualification letter, different, right? Pre-approval looks good, right? You're like, hey, they've been pre-approved, reviewed all these information. But when it says pre-underwritten, and usually the verbiage on that letter says your income, credit, and assets have been reviewed by underwriting, something to that degree, how much stronger does that make an offer look?
Oh yeah, that's exactly what you want to see.
Go. All right, next page here. So we're just talking about documentations, different types, scenarios. Again, this is super high level, guys. You have questions, you have one-off scenarios, send us a message, book a time on our calendars. Let's just go over it. There's no commitment to that process either. So there are different types of components that make up your monthly mortgage payment. Principal. Now this is literally your loan amount, interest rate, divided by the term of your loan, right? So if you have a $400,000 loan and you have a 30-year fixed, that payment is going to be dependent on how much your interest rate is based off of 360 payments. Property taxes. Many homeowners also pay their real estate property taxes as part of their monthly payment. Now, in most cases, you have to, but if you put typically a certain percent of money down in the process, you can have the taxes in the monthly payment or not. I ask people to do two things. One, do you want one payment and not really have to think about it? Or two, depending on your financial situation, if you can, we can look at not having the tax in the payment, but you got to know that there's going to be two large bills that come in April and November. Interest. Now, principal and interest kind of combine that. Obviously, that's the full term of the loan amount. And insurance. Typically, home insurance protects your home, obviously, against fire, other damages, flood zones, different things. Let me go to the next screen. I don't know if it shows PMI, but the one thing it doesn't have on there is also your principal, taxes, insurance, and homeowner insurance is also private mortgage insurance. Now, it's like a dreaded word that comes up all the time. I don't want mortgage insurance. Mortgage insurance is not a bad thing at all. It's literally saying, hey, you're going to buy a $500,000 house. You're going to put down 5% on this property. That's $25,000. We're going to give you a loan on an asset for $475,000. That's worth $500,000. That's a lot of leverage when you really think about it, right? It's literally like buying a car, having a loan that for higher amount than the car is worth. That's called gap insurance. Now it's reverse engineered almost, but from a homeowner insurance perspective, that's what the lender wants. It's just a little extra guarantee for them. Hey, if something goes sideways in a certain amount of time, they will have their loan covered and the house can be taken care of, right? So obviously it's a short-term solution to get you in. And when you run the numbers of what you're paying in PMI, even if it's 2 to 5 years worth of PMI payments, you still make a lot more money on that appreciation.
100%.
Oh, all right. Review your credit. This is one all the time. Hey, can you give me a pre-qualification or pre-approval without credit? No, we cannot. No. You can go online and you can print something from some random online lender that has zero information, zero education of the process. They'll probably print you something, right? You can go in. But here's the thing. A pre-approval letter is also the brand of the lender that you're working with. If I give you a pre-approval letter and your loan goes sideways and you don't close on time, and they're like, why? Or you get into contract and now I pull your credit and your credit doesn't actually fit to that loan program, or your debts are too high, we don't have any idea without pulling credit actually how much you qualify for and what we can do. Now, again, we pull credit from a mortgage perspective, 0, 5 points. Absolute most it's ever going to impact you from a mortgage credit pull itself. Obviously, don't go to 18 different lenders. That's excessive. So knowing your credit is very important when determining if you qualify for a mortgage. This is a time when you should pull your credit report. We obviously look at necessary steps to ensure you have built up sufficient credit history and that your score is the best it can be. If you've had one credit card for 10 years and you think that's enough credit history, good chance you might be wrong. So there is a amount of credit lines you want to have open and closed or a history of. In most cases, the higher the credit score, the better the mortgage rate you qualify for. Typically, yes, in most cases. This will also leave you plenty of time to correct any errors and inaccuracies on your report, which could cause problems with qualifying for a loan later. Personal example on that, I have really bad credit when I was 18, 19, 20, because you're 18, 19, 20. Yeah. And then I fixed that about 24 years of age. Now, I just signed up for a service about 6 months ago. I'm 30, and it found something as a medical collections that was still sitting in some deep, dark hole of my credit report. That's why we pull your credit. That's why we help fix inaccuracies. Because that was hindering my score by 10 points and didn't even know about it.
Yeah. And I think a lot of people don't even know their credit in general. So it's a huge help. Just run it and it will, the score will bounce back.
And Credit Karma is not, Karma is not your credit score. Trust me.
No,
Credit Karma says right now, I will tell you at a personal level, Credit Karma says right now, mine is a 680. We are pulling it for our mortgage and it's a 742. So I can guarantee you that Credit Karma is totally wrong.
Yep.
All right, about your credit score, right? So let's break down a few of the scenarios, and here are the top 5 things that are going to make an impact on your credit report, right? As a loan consultant, we'll run your credit report at the beginning of the loan process. These reports are usually good for about 3 to 4 months for the most part. And then obviously, if once they expire, we just got to refresh it, right? So we're going to pull all 3 scores from all 3 credit bureaus, right? So your credit scores range from a 3-digit number, anywhere from 350 to 850. If you see anything less than a 5 in front of that score, we have a problem. When you see anything less than a 6, you might be able to get a house. Here are the 5 things that come into play when it comes in your credit score. The biggest impact, payment history. Don't be late. Now, here's the difference between late and late on a credit report. If you're 5 days late, not usually the biggest issue. You're going to get a late penalty. That's what's going to happen. The credit bureau, that credit card, that loan, whatever, they're going to penalize you for that. Don't go 30 days late of paying credit. That's when it's going to be a negative. You have a 30-day late, 60-day late, 90s, 120s, and plus, right? If we see a 90-day late on anything, it's usually going to be stuff. We got to figure out what's going on. If that late is anything on a mortgage-related product, you can only have one of those in a 2-year span for the most part. Now, your 30% is your amounts owed. Another word for that is utilization, right? If you have a $10,000 worth of credit limits and you have $5,000 in debt on that credit card, that's 50%. Now, some people say, hey, well, if I use and pay it off every month, is that okay? Most of the time. Does it mean it won't impact you negatively? No, because the agencies still see your activity of that credit card balance. If that's the case, get 1 or 2 more. Buy some gum every year, keep it, but have 30 grand in credit availability. And now if you're using 5, now you're only going to be in a very small utilization ratio. Third one is going to be length of credit history. This is one that obviously you don't really have a whole lot of control over other than time. So really there's going to see that. Now, Credit Karma is really good for this. It's going to show you the length of the credit lines you've had. So if I've had a credit, like if you opened that first credit card that's $300 when you were 19 years old, right out of college or whatever, going into college, don't close that card. However old you are, keep that until you've really, really established. Because if you only have 4 or 5 cards, that could be your longest standing history in time, right? So keep that history. Credit inquiries and types of credit are going to come in at the 10% ones. New credit inquiries, they will stay on your credit report for up to 2 years. So make sure that you're not pulling it excessively. If you're buying a new car, please ask the lenders at the car dealership to run it with one lender at a time and go through that process, see who will give you the deal. Don't have them send it to 9 people. That's 9 credit inquiries, right? Types of credit are revolving and installment. Credit cards are revolving. You use it, you pay it. Installment. Here's a $10,000 car. Here's a $5,000 loan. Pay it off, right? So those are the types of credits and the impacts and percentages, what they hold on your credit reports.
Yeah, and I will say amounts owed is huge because I had an example where someone had one credit card and it was like a $5,000 limit, something fairly low. Could have been even less, and that's what they used to pay everything every single month. But every single month they're 100% owed, and so it really hindered their score a lot. But they had no idea. They just used the card and they paid it off. So that one I really learned that and you can see 30%. That's a huge amount that will affect your credit. So definitely make sure you understand that. And like you said, Credit Karma has some bad, it has some good, but it's not the end all be all. But it will help learn some of these things.
Yep. Awesome. So let's talk about a little about programs here, right? I mean, these are a few things that we go. Now, I love some of these options a little bit more than others just because I'm a little bit biased. But we're going to talk about a few different products. We're going to start right off with the 30-year fix. That's the most common one you're going to hear. It's the most common thing. You're going to see it in marketing. You're going to see it on the news. You say, oh, the 30-year rates are whatever they are at that time, right? That's going to be a 30-year fix. So that's just going to be your most traditional and most secure. It's going to lock in that payment. Your 5, 7, or 10-year ARMs. ARM rates stand for adjustable rate mortgages. Now that means with the 5, 7, and 10, that means that those loan programs are fixed for 5, 7, and 10 years, but they're based on a 30-year loan term. So you're thinking, well, if it's only fixed for 10 years and I got a 30-year term, yeah, that means that the rate can actually change after that 10-year period. Now, it's not a bad thing in most instances. It's about structure and understanding when the time is, right? Playing to that, what's the scenario, understand. Usually ARM loans do have lower rates in some situations. If it's conventional FHA or anything, for the most part, ARMs really come into play when you're more in the jumbo loan space. That's when you'll really see the biggest benefit, typically. FHA. FHA is going to stand for the Federal Housing Agency, right? That's going to come out with the Federal Housing Agency backs and guarantees certain loans and loan limits, so they're usually going to be easier. They have lower down payments that come into play with those. You can do an FHA loan with as little as 3.5% down. Now, that's a good thing. Your credit scores can be a little bit lower as well for FHA, but again, everything in lending is also based on risk. So if you have low down payment, really bad credit, you're going to have a really high interest rate. Mm-hmm. Jumbo loans. Now, jumbo loans are a loan that are just $1 over that conventional county loan limit. Now, you can do this. Go to HUD.gov, look up your county loan limit, literally Google, Jacksonville, Florida, 2022 loan limits. You'll find that information there. It'll show your conventional and your FHA. Anything above that loan limit is a jumbo loan for the most part. So that's going to come into play is most jumbo loans are backed by banks or bigger investors. They're not backed or housed by the Federal Housing Agency. Renovation loans. This is an awesome one, and Loan Depot is an expert. We have the best renovation loans in the country. We do more renovation loans than any other lender in the country as well. Well, the best thing about renovation loans is there are certain programs that, they're like, well, you have a cap, right? You do like an FHA 203K loan, which is a renovation style loan. You can buy a home. It's a little rundown. It's a $500,000 neighborhood. It's a $300,000 house. You can buy a loan that's going to let you renovate the process and then move in after the renovation is completed. There are some that also have caps where it's like, hey, we'll only renovate 30 to 35,000. Well, one of the coolest things about the renovation loan, especially within Loan Depot, is we're the only lender in the country that has a veterans VA renovation style loan. They can renovate as much as they need to make it. If they want to buy a house that needs to be completely converted to ADA, we can do it. So that's one of the best things. And all those repairs and fixes, again, we'll put a little caveat on the bottom, right? Every scenario is different. Could be renovated and put into that purchase with as little money out of pocket as possible. For VA, zero. They can renovate an entire home and buy it with zero money down. It's amazing. So those are some loan programs.
Oh, and yeah, that's awesome. So in terms of a first-time home buyer getting a loan program, what do you see as the most common? What do you see as the the best in your opinion?
Honestly, I say the most common are FHA and a 30-year fixed, to be honest. Yeah. Mm-hmm. I mean, if you're in a high cost area, you're in the Silicon Valley, you're in San Francisco, you're in some of the LA counties, you can definitely, some options might flow into those ARMs being better. And this current environment, as rates continue to increase over time, then an ARM can start to come into play. But I would say the most common is the 30-year and the FHA.
Yeah. And would you say a 30-year would be the most ideal loan for someone?
The most ideal to get into start, right? If one of the biggest reasons why you're buying a house is you're tired of your rent going from $1,800 to $2,000 to $2,500 to $2,800, right? Well, let's just give you a $2,500 mortgage and that's it. Go at it.
Yep. Exactly.
That's your payment. You can budget, you can live around it, and you're good to go.
Yeah.
Now, it doesn't mean you can't get out of it. You can't change it or refinance later. No loan is guaranteed forever. Like, you can change things.
Yep.
Right. So let's talk about this. Did you know that renovation loans may be one of the real estate's best kept secrets? I know I kind of just hinted on that at the very end, but we understand undertaking a home renovation project can sometimes be expensive. And what if you had to put your dream on hold of renovating that home? Whether you're thinking of a kitchen remodel, a room addition, Loan Depot, we do make the financing a little more simple with some of our super great, awesome renovation style loans. These type of mortgages allow financing to both the purchase of the price and the renovation cost to be lumped into one single mortgage payment. It's a great solution for those looking to create the dream home, especially in markets where inventory might be tight, the price points might be starting to creep up. So sometimes that home that's got little rough edges around it, everybody knows that's one's going to be bought by the cash investors. Can help.
Yeah, definitely. It's definitely an option most people don't even think about. So it's definitely something to even
Not at all.
Try to learn more about, for sure.
Absolutely, man. Awesome. So here's a little bit more benefits, again, just going through the renovation loan. And I think that's just because those other products we can go off of and they're so specific to the situation.
Yeah.
A lot of renovation loans have more generalized information that you can go over. Like, this is what's available, right? So ability to personalize the home you want to love, potential for some additional appreciation, right? Well, if it's a $50,000 upgrade that you want to do, you don't have $50,000 that you can just put into the property. Use the home itself to do that. You don't have to pull out a second mortgage. You don't have to use higher credit interest rates. You can obviously make it your home as things, right? So here are the products that we offer. The FHA 203K is a standard. There's a 203K limited, the VA renovation loan, obviously subject to VA eligibility, and the home style renovation. The home style renovation, I believe, is the one that does not have a limit on the amount that you can renovate into your mortgage within a certain loan to value of that property.
Okay. Awesome.
All right. The do's and do nots of securing your home financing. Stay current on your rent payments. Don't miss those. Those are considered housing payments. You miss one, you can literally kill your buying of the home process. That was backwards. Continue using credit as normal. Stay current on existing accounts. Don't be late. Don't miss any payments. Make sure you follow up with the correct procedures when receiving any sort of gift money. We'll help you through that process. Communicate with your team. Keep us in the loop. If you need to buy a car, let's talk about that. Hey, I need to buy a car, really need something. Okay, well, can you do something loan it, right? If you get a $500 car payment, there goes $100,000 in your buying power, right? Something to that effect. Maybe about $75,000 now. Do not apply for, open, close, max out, pay off any credit accounts at all. Don't do it. There have been so many times people are like, hey, I just paid off all my credit cards. I'm like, great, your credit score went down. They're like, what? I'm like, yep. It's a scientific, weird number behind the scenes. I don't know it. Nobody really truly understands it, but we have solutions and services and systems that we do have to help us understand it and teach you as well. Don't make any major purchases. Do not buy a Ferrari when you're trying to buy a house. Consolidate your debts into 1 or 2 credit cards. Horrible, right? Your overall utilization is the big picture. But if, again, you have 5 cars that have small balances and the utilization not bad, now all of a sudden you got 1 car that's got all those balances, that utilization just shot up the roof. Again, collective amount, but each card is negative. Don't change bank accounts or transfer any balances from one account to another unless we're able to provide a clear paper trail. We must track all assets for 60 days prior to the closing of that home. So if you're closing in the month of March, I need all transactions from January and February. People say, hey, man, what about all this money? They want to track all my stuff. They want to see all my spending. I'm like, no, what it is actually comes down to is laws that are put in place to go anti-money laundering. You just can't all of a sudden win the lottery and use that money tomorrow. It's got to be yours. You got to season it. We don't know if you took Aunt Susie's credit card and transferred money to your account. We want to know where that money came from, right? Again, don't do that either. But point being is extremist situations. You know, if uncle gave you 50 grand for the purchase of this home, that's great. We'll use it as gift funds. But again, we need to be able to track where did that money come from and for who.
Yep, exactly. And that will finish your 3rd step. And for the 4th and final step we'll go over today, it will be pretty quick, is actually finding your home. So let's get into it. First off, we really got to figure out, what do you want in a house? So we got to define your home criteria, analyze your values, your needs and wants, what's really important to you at the end of the day. Where do you want to be living? Is crime important to you? Are schools important to you? Is walking distance to grocery stores important to you? Are parks important to you? Do you want to be downtown? Do you want to be in suburbs? Do you want a condo? Do you want a townhome? There are so many different things that I have checklists for that you can go through and really define what your home needs are. And then we consult. We talk about it. We get together and as well as Bryce, and we understand what's going on in this market and what you can actually afford. Everyone wants the $5 million house because it's exactly what we want, but we might be able to only afford the $700,000 condo. So, and like we said in the beginning, we got to start somewhere, and maybe one day we will buy that $5 million mansion. So absolutely. Define and consult. That's where we start when we try to find our home, and we start viewing the home. What you consider and what your agent considers are different. You're going to be looking for, layout, space, a sense of value, convenience of location to work and schools, features and amenities. While what I'm looking for is how the home compares in terms of size, layout, value to other homes in the area, property types, maintenance, and structural concerns. So I'm going to be looking for all the things that you will never look for. Things I see in homes that are maybe concerning or maybe even a value add. while you may have no idea that that may be beneficial or not. But it's
Yep,
okay. You want to look for the things you want to look for, and I will make sure as a professional, I am looking for the things that may help or hurt you. And
absolutely, man.
that pretty much leaves us where we are today, is that we will go start looking at houses. Once we get to step number 5, which is make an offer, we will go over this situation. But the last couple of steps, we will not go over today. I hope everyone here learned at least one thing. And at the end of the day, me and Bryce are here at any time for you to reach out and ask any questions. You know, like Bryce said, hop on our calendar. We do this every single day. We help people, and we love doing it. So if anyone has questions, feel free to reach out. Bryce, any last words?
Awesome, man. No, I think it's exciting. Just going through this process. There's a lot of moving parts when it comes into the home buying kind of journey again, really. And I think best part about that is having the people around you that support you. I think you can't go back to that slide about the team more importantly than specifically in a time like now, right? A time right now when it is tough to get offers accepted,
Mm-hmm.
right? When it is tough to have these things, don't let yourself work with the wrong person. A lot of people talk about like discount agents, like, oh, well, hey, so and so will give me like half their commission back. Be like, there's a reason that they're willing to do that. You know what I
Right.
mean? So
Right.
when it comes down to it, understand it. You don't ask your doctor for a discount. Do not ask your real estate agent for one as well if you want all their value. If you ask for a discount, you're most likely going to get a discounted service. So I think, in
Right.
my opinion, your team is the number one thing, right?
Mm-hmm.
Making a decision to buy, crucial. The only thing I think more important in your life than buying real estate is probably starting a family. That is one of the most important things you're going to do in your life. So find the home to start the family, have the team. And we're not just here from the start to getting you in the home, but create your real estate strategist, your mortgage strategist, create your team for life. People that are
Mm-hmm.
truly going to help you secure this long-term success in real estate. So appreciate it. First time home buyer seminar. Those are the first 4 steps of the 8. We'll talk about the next steps on the next course. But
Mm-hmm.
it's been a pleasure, guys. Appreciate it.
All right. I appreciate you being on, and I hope you guys learned something today. And everyone.